Want to wish everyone a happy holidays, Merry Christmas, Happy Hanukkah, all that fun stuff. We're going to do a market review video, but I first wanted to cover a trade that we took at Strat. We are going to be opening up our paid trial window in January. We only open it once a quarter because we honestly just can't handle the volume. So be on the lookout for that. It should probably be around January 9th. Okay, so we were looking to take SPY short. We had our Strat class on Tuesday night, which we have every Tuesday. And we were talking about SPY and how we had monthly magnitude down to here, 368.79, to become an outside month. So on Tuesday night, we were talking about it. I said my perfect dream scenario would be to get some daily corrective activity, maybe back test the bottom of the broadening formation. And if you look at it, it ticked it perfectly. And then once I did that, then I would be looking for a short, targeting here first, here second, and then here third. So let's look into the hourly chart and see what we did. So we had this hourly broadening formation, and you can see when we went to 112 up, we tapped that bottom of the broadening formation. So I was looking for an hourly short signal, okay? And I alerted the room and told everybody, back tested the bottom of the daily broadening formation like I mentioned in class. I want to take an actionable hourly signal to the short side. You can see here's the setup. We didn't get it this hour, so we had to wait. And then we got it here. So then I alerted the room that I was going short. Our targets would be our first daily local lows. And then I was hoping to hold on to see if we could possibly start a starter position for the outside month play down at 369. But we just got so much move that the swing position was up so much. We just wanted to exit because we can always get back in, and I'll cover where we exited also. So we got our hourly actionable signal here. Our first target, like I mentioned, was here. So we took partials here. And then when we're trading SPY, we're also always watching ES. And so ES hit its daily magnitude, its second daily magnitude. Its first daily magnitude was to become an outside day. Its second one was to take out this pivot at 38.0350. And if you go down to a smaller time frame, you'll see we hit that at 11:30. So that's when we exited the rest of our short. You can see here yesterday at 11:42, exited the swing. And good thing we did, because if you look at this, look at that. All the way back up, almost to yesterday's high. This is a 5.5 to 1 risk reward. And even if you just took it to this pivot, it's a 4.6 to 1 risk reward. So we'll take that every time. Over here, I wanted to mention I was using the 12-hour chart because the daily chart actually has a phantom wick on it. And what I mean, I'll show you. See how the top of this candle is at 383.36? Well, if you go, which is the top of the intraday price action for 2 days ago. But if you go to the daily, you have this big wick, which is dark pool prints or stuff like that after hours. And the high of that is $3 higher. So that's why I'm using the 12-hour chart, because the 12-hour chart is a more accurate daily chart, in my opinion. And I see this happen a lot with SPY and fake wicks, because it's telling us the high of this day was all the way up here, but it was clearly not. It was clearly here. So that's why that. So the market's going to be closed Monday in observance of Christmas. Okay, so first thing to note on all of these tickers, the month is red and most of them are 2 up in red. So full time frame continuity is to the downside. On the month, everything pretty much was a 3-2 continuation week, which I do not enter on 3-2 continuations if it's on a certain time frame. I will go down a time frame though and trade that, which is exactly what we did. Because 3-2 continuations, in my experience, usually end up looking like this. They don't stay down. So SPY did go 3-2 down. Could not take out that pivot. So we'll see what it wants to do next week. Again, a short week. We prefer it to the downside, but we don't have a downside weekly actionable signal. So just going to have to kind of play on the daily chart. QQQ, a little bit better to play than SPY was. Same thing, red 2 up on the month, potential outside month target, which would be 259.08. Okay, we did hit this target this week, and same exact actionable signal as SPY, except it took out that pivot. SPY was a little stronger and didn't take that out. So now we have an inside day. The only potential actionable signal would be to the upside on the weekly, and we really don't want that because we want to trade in the direction of monthly time frame continuity. IWM, same story, except this was 2 down continuation, took out this pivot, that target. So on the daily, took out that level. That's exactly where you should have took profit, or this daily little pivot low there. So again, going the next week, the only actionable signal would be to the upside, and we don't want that. So I almost suggest not trading at all next week. The conditions are just not favorable. You have this little bitty internal broadening formation. So price went up, hit its target. If you were long this day, you would have gone 2 down, 2 up, boom, hit your target. That's where you take profit right here. And then it fell back in. You've got an inside day on the daily, so you could take that pretty much in either direction because you have a lot of conflict. You see here, green, red, green, red. So again, not a lot of clarity. Don't like it. Don't suggest trying to even trade next week. So Bitcoin is in this bigger broadening formation. But what happens when you're in a broadening formation like this is price can tend to get stuck and just want to tighten up. So that's what you have here, a tightening range. So the month is red, the week is green, so you're in conflict, not a lot of clarity. Hopefully Bitcoin can stay an inside month because that will give you a very clear actionable signal next month in January when we get our new actionable signals. And what I mean by that, oops, let's just use that line and we'll make that the monthly trigger. So if it stays an inside month, then you have a very clear strat setup, which is a 3-1-2 potentially down. That'd be what I'd be looking for because you got this yearly fair value gap target of 13.8, which I've been talking about for a long time. Okay, XLE. Last market outlook video, I talked about how there's no way, I didn't think it was going to get down there, but you did have a fair value gap target to the short side. So the monthly trigger short was here, and then your target would be here. Well, it did that exactly last week. It tried to go 2-1-2 down on the week, but if you look at the daily, how did that occur on the daily? It occurred on this day when we went 2 up, 2 down. when we went 2 up, 2 down, the stock had already moved this much on the day. You do not want to be entering short after this giant of a move. So that's how come that just peaked down and didn't do anything, right? Potential weekly actionable signal for next week, it looks like they want to take energy back up long. So this would be a weekly bullish rev strat. Problem is you're still fighting monthly time frame continuity. So again, not a lot of clarity. Gold inside week up at exhaustion risk. This looks really good actually for a short. So we're at exhaustion after taking out that pivot. We know that we love inside bars at exhaustion risk. So if you break below 166, you're going to target 165, 164. So you've got all these pivots lined up right here. Look at all of these. And you have a potential daily actionable signal for Tuesday, the first day of the week, which would be a 2 up that didn't go anywhere. Took out the highs barely by 4 cents. So a 2 up, 2 down would be your actionable signal, and hopefully you get some follow through. XLU, I talked about how this was horribly ugly, stuck in the middle of a broadening formation. It's just ugly. The 3-2 didn't go anywhere. It actually gapped down below the weekly trigger, which is not actionable. Came and used this. If you're an ICT student at all, I'm sort of one, but this I think is called a breaker block, maybe. But basically, previous resistance acting as support, and that's exactly where it stopped. Again, don't love it because you do have a potential weekly actionable signal of a 3, 2 down, 2 up. Actually, if that works, that could change the month to green because the month would turn green above 72.13. So, that might be actually okay, but still, you're stuck in the middle of this broadening formation. I just don't really like it. Okay, so we knew we were exhausted on the monthly after taking out that pivot high. You got a 3, tried to go 3-2 down. Again, didn't go anywhere because I don't like 3-2 continuations. This is why. Because they always, for me, end up looking like this, which is not fun. Oh, I see what it did. Price came down into this fair value gap right here. Beautifully, actually. So now maybe they want to take it back up. If so, that's a really far target for only having 4 days in the month. So be careful. XLV, literally the same thing pretty much as XLU. 3, 2 down. Red month, not pretty. Again, you could try and take the weekly actionable signal, but that's a very big target and most likely will not get hit. So why would you want to put yourself in that situation? XLF, same story. Almost hit the outside month target of 33.08, but kind of bottomed out right by it. So you got, again, upside, but same story as everything. Conflict, and I seriously doubt you're going to come and take out this high in 4 days in a low volume trading week. Again, probably just don't trade this week. Same thing. Everything's the same. Fighting the month. Conflict. Gross. Same story. Don't like it. XLY did hit its outside month magnitude. The last video we did, we talked about that because it barely ticked up on the month, then turned red. So we know to be expecting outside bars. And that's what happened. XLK, same thing. Exhaustion up here, got a 3-2 continuation down, and all this did was come and fill the gap. So that was a target, and that target got hit, so that's good enough. The only actionable potential weekly signal would be a 3-2 down, 2 up, just like everything, but again, too much target, not enough time. We had this tightening range. I was talking about mother bar problems, and the last week we gapped down, so this wasn't in fact actionable because we didn't trigger to the downside. We gapped below our downside trigger. Same thing, tried to take out last week's lows, stopped any bulls out who had to stop below that week's low because we took it out just by a couple little ticks. So if you use maybe a 2-week time frame, this is your mother bar. The last 4 weeks, sorry, have been stuck inside this candle. So I wouldn't touch this. I would wait for the monthly actionable signal, which you'll get here real soon. Because this is going to break. It's going to break some direction. But when it does, you're also going to have new yearly continuity because we're going to be starting a new month, which is starting a new year. So this could go either way. Either way this wants to go 2-1-2. It could go up. That would be full time frame continuity. Or it could go down, and that would also be full time frame continuity. SMH, same thing as everything. No way we're going outside month. This kind of just fell apart. Didn't quite fill its gap, which you always wish that that would happen, but it didn't. So, moral of this market outlook video, probably just don't trade next week. Enjoy your Christmas holiday, spend time with your families, take a break, get off the screens, get off Twitter, and just be. Maybe work on your vision boards for next year, what kind of goals you want to achieve as a person and a trader. I know I will be doing that very soon myself. I look forward to it every year. And I think that's all I got. So I will catch you guys next year. Happy holidays.